Hi, me and my team will discuss budgeting. We will go through the components of master budget and explain how budgeting will contribute to Apple's profitability. A budget is an estimate of income and expenditure for a set period of time. They are used to plan and control revenues and expenses. In order to create a new budget, we must look at past income statements and balance sheets. Therefore, a master budget is the comprehensive planning document for the entire organization. It consists of all supportive budgets needed to create the company's budgeted financial statements. So, what are the benefits of budgeting? Planning will allow managers to plan for the future as well as tend to day-to-day operations. When a new product is being produced, it helps coordinate between all departments such as marketing, distribution, design, and production. It also provides a benchmark that motivates employees and helps managers evaluate performance. Dabisha will explain Apple's sales, Imad will explain production, Zin will explain capital expenditure, and Ryuta will talk about cash flow.
Before creating a sales budget, we need to consider several external and internal factors in order to ensure that we get high earnings and high profit for next year. So, for example, we have to look at our historical data. If we analyze our past records and take a look at our net sales, we'll see that we had a 6% increase from 2016 to 2017, about a 16% increase from 2017 to 2018, and about a 2% decrease from 2018 to 2019. If we analyze furthermore and take a look at our quarterly trends over the past few years, one pattern that really sticks out the most is that our first and last quarters bring in high revenues for the company. So knowing that our sales took a 2% hit last year, but also knowing that our first and fourth quarters bring in much sales, we can then create a sales budget to ensure that we rake in high sales. So, for example, we can communicate with our advertising and marketing department to ensure that we up our campaigns during these particular periods in order to ensure that we get high sales. Another factor we need to take into consideration is changes in our business model. Are we introducing new products? Are we introducing new services next year? If yes, we have to adjust our sales budget. We also need to take into account economic conditions in our consumer markets. Unfavorable economic conditions will affect consumers' buying power. For example, if we look at our growth rate in China, it decreased significantly since the end of 2018 up until sometime in 2019. This was due to weak economic conditions in China and also the ongoing trade war going on between the States and China. So we need to research economic conditions in our consumer markets to ensure that we remain strong and that our sales do not get hit by these weak political or government states. Another thing we need to take into consideration is the tech industry in 2020. Big trends to see in 2020 include blockchain technology, 5G data networks, application of AI, etc. So we need to, for example, communicate with our R&D department, our design department, and marketing and advertising to ensure that we come up with products and services that align with these trends so that we meet consumers' needs and desires. So by aligning ourselves with the tech industry in 2020, we can ensure that we get profits next year. And finally, one important factor we need to consider is competition. Our big competitors include Microsoft, Google, Amazon, and Sony, amongst others. So by having an idea as to what these competitors are going to bring out next year, we'll be sure to remain strong amongst competition. So by researching all of these factors before creating a sales budget, we can ensure that we're ready for high earnings and high profit.
To estimate the number of labor hours that are needed to produce the units itemized in the production budget and break it down to labor category. Management use this estimate to the number of employees needed to staff the manufacturer area, and also to forecast the hiring needs and plan the schedule over time, and finally estimate when layoffs are likely to be happen. The direct labor budget is typically presented in quarterly basis. The basic calculation used by the budget is to import the number of units production from the production budget and to multiply this by the standard number of labor hours for each unit. This yield a subtotal of the direct labor hours needed to meet the production target. Management multiplies the total number of direct labor hours by the fully branded direct labor cost per hour to arrive at the total cost estimate of direct labors. The direct materials budget uh, calculates the materials that must be purchased by time period. In order to fulfill the requirements of the production budget, it is typically presented in quarterly basis. The budget contains the majority of all costs incurred by Apple, compiled with considerable care. The basic calculation used by the direct materials budget is raw materials required for the production plus planned ending inventory balance, which gives us the total raw material required, less the beginning raw materials inventory, which leads to the raw materials to be purchased by Apple to fulfill the production requirement. Apple estimates the direct materials budget for every component in inventory. The estimation must be massive and covers all items included in the finished product. This budget generates the expected direct materials budget for the future periods. Apple direct materials budget calculated based on the historical percentage of the direct materials experienced in recent reporting periods, assuming that the same ratio of direct materials costs to revenues will continue. The mix of products sold will change over time, of course, and this is the only risk in the Apple budget which they are preparing for direct materials.
All right, now I'm going to talk about the capital expenditure budgeting. Well, capital expenditure budget is another important aspect of a company's annual budget. In general, capital expenditure are for major purchases that will be used in the future. A capital expenditure budget may span a longer period than the annual budget. The reason is that some larger fixed asset acquisition involve lengthy construction period and it can greatly exceed 1 year. For example, in 2017, Apple just finished its new headquarters, Apple Park, which estimate cost around $5 billion and took them about 4 years to finish. Well, in terms of Apple's latest 12 months capital expenditure is $10.5 billion, which is Apple's 4 years low. And the median for companies in the information technology sector has a capital expenditure of $6.1 million. So in terms of that, Apple's capital expenditure is significantly greater than the sector median for the most recent period. Well, as for capital expenditure budget, it offers many advantages like adequate control over expenditure for projects, and also capital budgeting can help a company to understand the various risks involved in an investment opportunity and see how these risks affect the returns for the company. It also helps the company to make long-term strategic investment as well as to estimate which investment options will yield the best possible return. And it also allows management to have a control over from over-investing and under-investing.
So next I will explain about cash flow budget. So cash flow budget is an estimate of all cash receipts and all cash expenditures that are expected to occur during a certain time period. Cash flow budget is used to assess whether the company has sufficient cash to operate. And cash flow budget determines if the company's cash is being spent in unproductive ways. So why cash flow budget is important? Cash flow budget allows company to establish amount of credit can extend to customers without having problems with liquidity. Cash flow budget helps avoid a shortage of cash when company encounters a high number of expenses. Also, the increasing value of cash indicates strong demand for the company's products and opportunities, which means it is more attractive to the investors. So to forecast an accurate cash flow, company requires to account all the operational changes that happen during the year. So next, I'll explain briefly the possible cash flow budgeting of Apple for the year of 2020. These values are calculated by assuming Apple sales grows at the same rate as 2019. So first, operating cash flow, net income is expected to grow 4% to 57,500 million in 2020. As a result, the total cash generated by operating income will increase 7% to 7,910 million in 2020. For investing cash flow, the purchase of marketable securities, proceeds from sales of marketable securities will be budgeted by similar amount, and the total cash generated by investing activities will be $47,000 million. So for financing cash flow, payments for dividends increase to $15,000 million, and repurchases of common stock will also increase to $7,000 million. So Apple will require investing $95,100 to obtain the company stocks. So in total, as an estimation, Apple will have a total of $76,034 million in cash in the year of 2020, which is higher than 2019.
So to summarize the budgeting, the following main points have been discussed: the historical data, changes in business model, economic conditions, the tech industry and competitors, production budgets, which consist of direct material and direct labor budget, capital expenditure. We also talked about the cash flow and its importance, which consists of financing, investing, and operating. Thank you all for listening.